welcome everyone. Welcome to this Tax Time Bookkeeping Wrap-Up. Us three ladies decided to put something together for you guys because it is the end of year and we know firsthand how hectic it can be. So we just want you guys to be prepared, give some tips, checklists, some guidelines that you can follow for year end so your tax professional will be very happy with you. My name is Ylyss Taylor Nurse. I am the founder of TaylorMade Accounts. It is a bookkeeping, accounting, and advisory practice. We specialize in monthly reporting for small business owners so they can see their numbers on a frequent basis so they can grow their companies. I'll just pass it on to Lorraine.
Oh, hi. So good morning, everyone. My name is Lorraine Millington. I'm a tax strategist and an enrolled agent, which basically means that I have the highest certification level from a tax preparation perspective. And so, as Ylyss mentioned, we're putting this together because we want to kind of prevent the scramble that happens at the beginning of January, right? We want to help give information and help give some tips and strategies to be able to implement these things before the end of the year so that next year you're starting out stress-free and organized and ready to go as it relates to your books and then also the filing of your taxes. So welcome. Glad to see everybody here.
Yes, and my name is Clarita Emmanuel. My practice is called CME Accounting LLC. And like Ylyss, I also help prepare books and get you ready for end of year, also maintenance throughout the year. And it's just a matter of making sure that for us that we support you, whether it be getting your books together or getting guidance when it comes to accounting or business operations in general and advisory. So thank you so much for joining us.
So today's presentation is in partnership with NYC Small Business Services, WAM, and KRVC. Who is this workshop for? So like we mentioned, we wanted to put things together, but it depends on where you are in your business, right? You might have different needs. You might be a first-time entrepreneur wanting compliance. We can tell you dates and recommendations for what you should do. Experienced owners who want to streamline books. Maybe you want to be more efficient. Maybe you don't want to manually enter things on a monthly basis. Maybe there are processes that we can help you with that you haven't thought of. Bookkeepers seeking industry refresher. Maybe you haven't done this in 7 years and you just want to know a catch up of what is required. Or when we put this together, we had in mind that our demographic would be restaurant, bar, and food service owners. So maybe you are not a service-based business. These are all of the categories that we're targeting today. So bookkeeping basics, I'm sure you guys have a little idea of what it is, but we're just going to touch on what it is versus what it isn't. So it's the tracking of all money coming in and out. Focus on the word all. One of the main things with bookkeeping is people miss things, right? You think that you get all of your transactions, but you're not seeing the entire picture. We focus on record keeping, knowing what everything is for. What it is not, it's not accounting. It's closely related. It works hand in hand in tandem with each other, but accounting uses bookkeeping data to analyze the bigger picture and advise strategy. Bookkeeping data is not just used for preparing taxes and tax strategy. It is used for growth. It is so you know where everything is, so you know how much your income is, so you know how much your expenses is, so you can improve your business. Bookkeeping is like the root of your financial tree. So it is needed for your company to grow, for the tree to grow, for the branches, for the taxes, for the strategy. All of it can't be done without the bookkeeping.
Thank you. And as Ylyss mentioned, bookkeeping is very important. When we look at bookkeeping, some of the reports that all business owners should know are the profit and loss statement, the balance sheet, and the cash flow statement. When we say profit and loss, we sometimes refer to it as the P&L, and that basically shows you all the money going in and the money coming out. And at the end, you get your profit. So you can tell whether the business is operating at a profit or not by looking at that statement. Then we have the balance sheet. That helps you to figure out what you own and what you owe. So as accountants, we call it assets and liabilities. It gives you a good sense of where you are financially when it comes to the business, how much it's worth. And cash flow statement. Again, it's closely related. When we say profit and loss, we're looking at income and expenses. With the cash flow statement, the money moves in and the money moves out. We need to understand the cash flow. So we sometimes hear people say, okay, so even though it's profitable, why does it seem like I'm barely making it through the month? That's where cash flow comes in. It gives you a sense of where it is in comparison to your bank statement. Common misconceptions. As accountants, some of the things we hear are, I don't make enough money to need bookkeeping. But I think that's when you need bookkeeping the most, because bookkeeping, like Ylyss said, helps with growth. So as you're getting started, it's good to know where you are and what that looks like to help you make those decisions. Another thing we hear is, I'll do it once a year. Can you do it once a year? Yes, you can, but you'd be missing out. You're missing out on all the data, all the storytelling that your numbers are telling you throughout the year. And at the end of the year, it becomes more stressful as well for everybody, the tax preparer, the business owner, everybody. It's a very stressful time for them. So it's better if you just do things throughout the year to make things easier for you and to be able to get the information that you need. Bookkeeping is only for taxes. Ylyss touched on that earlier. It is not just for taxes, but it is very important to prepare for your taxes. My tax professional does all of that. Can a tax professional do it? Sure, they can. But do they want to do it? Probably not. So, see Lorraine there. So any tax preparer would say, the best clients are the ones who come in already prepared. So it makes it so much easier to just use those numbers to prepare the tax return. Also, it costs you less in terms of time, in terms of making bad decisions, because you already have all that throughout the year. And then when you meet with your tax professional, you're now focusing on strategy. What are the things that we can do to make things better? So you want to have the bookkeeping ready for them. And the fifth one we will look at is, I'm not a numbers person. And you know what the good news is? You don't have to be a numbers person. It's more about just keeping track and having people on your side, having the guidance that you need to be able to do this properly.
Why year end matters? It matters because it is the end of the year, and that's usually how tax returns are filed, right? It's through likely on a calendar year, January to December. I mean, there are exceptions. If there's a nonprofit, then it might be July to June. But year end is when everything needs to come together, and we need to make sure that your financial records match reality. Because again, like I said, people think that they have everything, but it's not all there. We also want to avoid surprises at tax time. It's better when you go into tax time having an idea of how much your income is, how much you spent, so you don't get hit with this $25,000 tax bill as a surprise, right? We want to make sure that we're prepared for it so we can put money aside. And of course, Lorraine is going to touch on that later. Start the new year with clean, accurate numbers. Everybody wants a fresh starting point. Like, you don't want to go into April still doing last April's numbers. Like, we're just trying to avoid the scramble at the end. And here we have a year-end bookkeeping checklist, just so you have an idea of what you should be looking for, whether you're doing it on your own or whether you have a bookkeeper. These are the things that you need to be making sure gets done. Review and verify your income, right? So again, depending on what type of business you have, whether you have entered all of your invoices, whether all of the invoices are valid, whether all of your deposits were going to sales, but you had a refund from a purchase that you made. That is not sales, right? So we want to make sure that all income is correct. We want to review and categorize expenses. So everything that was charged on your credit card, everything that came out of your bank account, we want to make sure that that is accounted for and put into the right buckets, because when we file returns, we all know expenses get different deductions. Reconcile bank and credit card accounts. This is, to me, one of the most important parts, because, like I said, people feel like they can just enter this. Oh, I think I paid for this. I think I did this. I think I did that, versus exactly what came out of your bank account. We want to match, we want to mimic exactly what your bank statement shows into whatever system you're using. If you're using a software, if you're using Excel, we want to make sure that those balances tie. And if they don't, then you know that you're missing some transactions, and then you're leaving money on the table, ideally. Review payroll and contractor payments. So when it comes to payroll and bookkeeping, we don't want to just record the net number that comes out of the bank, right? There are gross salaries, there are payroll taxes, there are payroll benefits, there are payroll fees. We want to record all of that separately. And then there are contractor payments, people that are doing freelance work or you had to obtain a W-9 for. We want to separate those. Those are treated differently in accounting. Confirm assets, loans, and major purchases. So we want to make sure that furniture and equipment are not counted as an expense on the P&L. We want to make sure that all of our loans are reconciled. We want to book the interest, because interest is a deductible expense. We want to make sure that everything is accounted for. And then we want to make sure that we have clean reports for the tax professional, because like we said, that's what they look for. That's what makes their job easier. That's what makes it easier on you. That's why you have to pay less money. We just want to make it the easiest for you as possible.
So, like we mentioned earlier, when we prepared this, the focus was for bars and restaurants. So here we will kind of narrow it down where we look at why bars and restaurants need extra attention. So bars and restaurants, we understand, are handled differently from a business in the service industry. For instance, even us as accountants, our business will look different from what a bar and restaurant business would look like, or what an attorney's business would look different from yours. And some of that is because of the high volume of transactions, especially small transactions. We know a lot of people come in and out, so there's a lot there to manage, and it is even more important to do that regularly, so that it can be more accurate, so you can ensure that everything is taken into account, like Ylyss has mentioned. And one of the biggest differences between a bar and restaurant business compared to any other service business is the inventory. There are items that you buy and you have in the business, whether it be used for retail or for operational, that we will look at later because there's a difference there. But there are things that you buy and then they become inventory for the business. And as we mentioned about balance sheet statement earlier, so that is considered an asset. That's something that you actually own. So we need to account for that properly. So it's very important that that is taken into account. Also, when it comes to the way, so we have large teams when it comes to the industry. And then some of them are treated as full-time, some as part-time, and some as contractors. Now, when we pay those people, we don't want to present it as one bulk amount. As Ylyss said, there are things that needs to be broken out. And even on that level, tips over time and the salary, they cannot all be bulked together. Those need to be handled separately. So it's particularly important to keep that in mind when we're dealing with bars and restaurants. And what are some of the things that we should know? We need to track the costs of goods sold. So when we say cost of goods sold, we mean the things that you buy to use directly in the business. Well, let me take that back. The things that you buy to use directly for what you're providing. So that would be the items that you use to prepare the food. That is cost of goods sold. And why that is important, it gives you a sense of how profitable the business is. When we look at, for instance, food items, the prices on these change all the time, especially in the economy, the state of the economy right now. There's a lot of fluctuation in prices. Keeping track of that helps you determine whether what you're selling is as profitable as maybe it was not too long ago. So that's very important. Earlier, I mentioned about inventory, where we buy things that we use to prepare the food, but then we also have to buy items to help the business run. An example would be if you buy pasta to sell, meaning you cook the pasta to sell. That's different from if you buy a cleaning supplies, because the cleaning supplies is used for the operational part of the business. So these two things, even though you buy them from the same person, it has to be accounted differently because it's used differently in the business. They will appear at different places when it comes to the bookkeeping, because one determines how profitable the item that you're selling is. So that's why it's very important to differentiate those. When it comes to point of sale, when we say point of sale, we mean the system that you're using. In the business, for instance, some people have Toast, some may have Clover, and then there's Square as well. So when people come in and they purchase, the system that you use there, it's important for that to be, or it's at least, it's more ideal for that to be synced in with the accounting system that you're using. So that helps with automation. The information that you get from there automatically transfers to the accounting side. So it takes away from having to do the work twice, meaning you already have it there, now you have to put it in the system manually. And it really helps to streamline the process. So that's one way to improve the operation side of things and to save you a lot of time and stress. And earlier we also talked about contractor versus employee. That's a very important classification that needs to be taken into account, and that does affect how things show up on your books as well.
Common restaurant bookkeeping mistakes. So mixing personal purchases with restaurant expenses. Now, this is a common mistake in every industry, and especially in the restaurant business. Like, it's an absolute no-no to mix personal and business transactions. If you know that you buy personal items, you absolutely need to change that. Or people make mistakes. You can use the wrong card if you go to the store, right? I use my business credit card when I should have used my personal, or whatever it is. In that case, it is very important that you record the personal expense as a personal expense on the balance sheet versus the P&L, right? Because the P&L is for business expenses. So we just want to make you aware that that should not be done. Separating employee meals from business meals. So meals in the restaurant business is a main part of the restaurant business. So we just want to make sure that you're booking everything correctly, and it can be missed, because if your employees have meals at the store, that is different. That is like an employee benefit. If you're getting like a discount, if they're getting discounts on meals, versus if you take a client out to another restaurant, right? Or if you go out and you eat on your own or whatever. It's just a common mistake that we see, that everything is lumped together. And the key with accurate bookkeeping is making sure that everything is where it belongs. Ignoring cash transaction. This is huge. Some people feel like if they get cash, it doesn't exist, but it does. It's very important to deposit the cash that you have, keep track of it, even if you have a cash ledger, if it's just cash in store that you're taking money in and you're using for company supplies, you need to track everything. Not using a point of sale report system for reconciliation. Right. So like Clarita mentioned, a POS system is very important when it comes to inventory. Inventory is almost impossible to track on your own. So using a point of sale software will help you see very accurately your cost of goods sold, the price that it costs you to produce the things that you are selling. And again, choose tools that support growth. In the beginning, I mentioned who this is for. Everybody wants to be more efficient. No one wants to spend all of their time doing certain things. So the tools that we commonly see in the accounting bookkeeping world are QuickBooks and Xero, any type of accounting software that you can get familiar with and learn. QuickBooks and Xero seem to be the gold standard. That's what most people use. There's also Wave. There are Peachtree. There are things that people use, and we suggest that you do use a cloud software based on where your business is. If you're just starting out and you have 4 transactions, obviously you're going to use Excel. But as you grow, you need to grow with the tools that can help you make your life easier. Payroll systems that handle tips and taxes. If you're running payroll, you want to use companies that know how to do these things. So whether that's ADP, Paychecks, Gusto, there are so many softwares that you can use. You also just need to communicate with them that this is the industry. I want to separate overtime, benefits, etc. Point of sale, we've spoken about that numerous times. Like Clarita mentioned, Toast, Clover, Square, all of the things, using a receipt scanning app. So with your bookkeeping and with your business, you're usually the one making the purchase. So that would be on you to keep track of where the receipt is going, whether it's you taking a picture, you scanning it, you sending it to your bookkeeper to put into a file, just having a system where you can keep track of those things is very helpful for growth.
So we've talked a lot about bookkeeping, and here we will just focus on ways to make it easier. We've probably touched on some of these, so if you hear it again, that's okay. We just want to reiterate. So the first thing we look at is connecting your bank feeds. So basically, for QuickBooks, for instance, we will connect your actual bank account to QuickBooks, and that information will flow in there. So it's already there when your bookkeeper or yourself is ready to do your books. But also your Toast, for instance, would be connected to that as well. So basically, there is a very good flow of information amongst all the systems. So they're all talking to each other. So it makes things so much easier for you. And it's really a world of difference for those people who actually incorporate that in their business. They get a lot of time back, and it just makes things go a lot smoother. Set rules to auto categorize. So when we're in QuickBooks, for instance, instead of you going in and working on every transaction individually, there are rules that you can actually set that actually does it for you. So the system understands this is how you treat a certain expense every time. So every time it comes in, you can actually set something where it handles it. And the person doing the accounting, the bookkeeping at that point is more of a review rather than doing each transaction separately. And that saves a lot of time. As Ylyss mentioned, we need to keep personal and business accounts separate. So even though there are the occasional, using one in error that we handle in the books, but we want the norm to be that anything personal is handled on the personal account and anything business is handled on the business account. And what that does, that helps save you a lot of stress. So you're not having to figure out, what was that thing that I bought and now I'm not seeing it because you actually used a different account. So that creates more work for the accountant and the person just doing the tracking in general, because now you have to try to figure it out on your own what was personal and what was business. Whereas if you just separate things to begin with, you don't have that issue to deal with. We talked about that already, snapping photos of receipts. So I think there are different ways to do that. Some people, they have the shoebox or some folder, and then as you get receipts, you put it in there and you handle it in bulk at some point. Systems such as QuickBooks, for instance, they have an app on the phone where every time you handle a receipt, you take a photo and it does what it's supposed to do. Once that photo gets uploaded into the system and it gets matched to whatever the expense is on the credit card or the debit card. So that makes things so much easier. It's good to know that that is available. Track card spending immediately. So we know it gets very busy. We do not want to ignore that. A restaurant can get very busy, but I think if there is a system, it's all about systems. All what we're talking about here is systems, whether it be an actual software or just the way we operate within the business. It's important to just understand, if you, for instance, if today you've dealt with cash, maybe just writing something in a notebook, just some way that works easy for you to actually track how that money is being handled. For instance, Ylyss mentioned sometimes we get cash in the business and we spend it right away. And that's okay as long as it is tracked properly, because on the other end of that, we can go in and now record it, but we just need to make sure we track it properly. Set a schedule for inventory counts. That is something that is so important, especially at the end of year, because we need to understand how much the inventory, whatever we have in the business right now, how much that is worth to us. So it's not just that it's sitting there. This is actually money that's there. So you want to make sure we go and we actually count it so that that can be represented properly on the statements. And review staffing costs monthly to prevent overspending. It's very important to track that so that we know what's happening there and make any adjustments if necessary.
Okay, it's tax time. So just kind of adding on to everything that Ylyss and Clarita have mentioned, bookkeeping is really the foundational piece as a business owner, an investor, an entrepreneur, right? Like you need to know what your numbers are. And again, just to reiterate what was mentioned, it isn't just used for taxes, even though it is a very big component of being able to prepare your taxes, but it's also used for funding, right? Like if you're going to either bring on investors into your business, going to invest in certain projects, they're going to want to know what your financial statements look like. And if you don't have those, it's going to make it difficult, generally speaking, to either expand or add in more resources for your business. So it's really important to understand these different components that both Ylyss and Clarita are mentioning, because it is really a foundational piece of your business. And I mean, I know we didn't necessarily touch on this, but bookkeeping can also be done from a personal standpoint as well, right? For those, especially at the end of the year when you're looking to either save more or budget or do all of those things, having a system to kind of do personal bookkeeping is also really important. So a lot of the things that they are sharing this morning can be applied on the personal side as well. And also, as Clarita had mentioned, when we were initially putting together the information for the workshop today, we were a bit more focused on the hospitality industry. But I also want to say that a lot of the things that I'm going to mention are applicable to all businesses, right? Like not necessarily just in the hospitality field. So these are certain strategies that most businesses often miss, right? And so to start with, and I think we've already also talked about some of this, is the everyday costs that happen within a business, right? Whether you're purchasing equipment, whether you're purchasing materials for your business, whether that's a specific I don't know, I would say a copy or a certain type of machine that you need to use in your business, computers, printers, like all of these things can be considered equipment. And oftentimes, depending on how much this particular piece of equipment costs, we don't necessarily want to just directly take that as an expense, or sometimes we can't directly take it as an expense. It sometimes has to be capitalized or in tax talk, depreciated over time in order to be able to capture the expense of what you've purchased. And that's also used as a tax strategy, right? Because sometimes you want to be able to spread out this expense over time to be able to give yourself future deductions and future tax credits in the upcoming years as you continue to make money in the business. So understanding what you're already doing from an everyday stance in your business and how that can be deducted or leveraged as a cost from a tax perspective. Also, operating expenses. Like there are different things that we're paying for the business that we don't necessarily think could be used as a write-off, whether it's utilities, especially if someone has a home-based business, right? The different things that you're doing in your home from an operating perspective, paying for heat and light and internet and all of those different things. These are all considered or can be considered operating expenses. So we want to make sure that we're documenting these things, or at least understanding how these things can apply from our everyday stance, but then also how it applies from a tax standpoint. And then marketing. So, I mean, I often tell clients, I mean, generally speaking, marketing is going to be one of your most expensive expenses for your business, because without marketing, generally speaking, you don't have sales. And without sales, how are you generating revenue and bringing in leads and all of that? So marketing is can be a really powerful, or is a really powerful component of your business, but understanding how what you're doing from an everyday stance actually contributes to marketing. For example, and I also think this was mentioned in the bookkeeping piece about, let's just say that you, especially if you're a restaurant owner, I'll use that as an example, and you create a kind of a tasting, if you will, like you just opened up a restaurant, you're having a tasting of your menu. That can be considered a marketing expense. It's not necessarily something that would be directed towards meals, because you're trying to generate business and generate leads by bringing in people to taste the food that you've now created for your new restaurant. And I'm just using that as an example from a conceptual standpoint. So that's considered marketing, right? Like you wouldn't necessarily have to create that as a meals expense, which, not to be too technical, but then you only get 50% of that as a deduction versus a marketing expense where you can write off that whole 100% of what you spent. For those that are in other types of businesses, if you hold fundraisers, if you do certain things to be able to generate awareness and generate business around what you're doing, those can all be considered marketing expenses. And so we want to start, I guess, paying attention to the different things that we're thinking is like, oh, I just did this thing, and see how it applies from a strategic standpoint as write-offs for the business. And that kind of also goes into expenses that are typically left off of your books. So I mentioned home-based businesses. A lot of times, because it's not an expense that directly comes out of the bank account, it sometimes gets left off of the books, like home office, like I'm in a home office right now, right? So being able to understand what expenses go into maintaining the home office, and then working with your bookkeeper to make those entries into your books or into your software, so that those can be reflected on your books, so that you have accurate records to then be able to file your taxes, so that you're not leaving money on the table, right? Everything is being accounted for. The same thing with mileage. Mileage is not something that you're necessarily, charging to the bank account or the credit card, but it is something that can be, one, that is a business expense, and then two, that's also applicable, and that can be entered into the books. But these are all things, again, that we're just doing in the regular daily course of life that we need to understand needs to then be added on to the books, so that you're taking advantage or leveraging everything that you're doing from a business standpoint. Education. I know oftentimes there are all these different conferences and masterminds and trainings. All of these things count towards education, due diligence, continuing education. All of these things count as a business expense, right? And so we need to make sure that if we're joining networking groups, if we're joining, again, like I said, masterminds or different workshops, that we're taking these things into account, because these also count as business expenses. And then travel, right? I mean, I know it's the holidays, so maybe some of our travel is more personal than business, but we also want to pay attention to the different travel that we're doing. And that doesn't necessarily always have to mean um, going out of the country, right? Or going to, another state. It could be, again, if you're traveling to these different conferences, if you're traveling to these different meetups and gatherings, that also counts as travel because you're going to a business related activity. So I'm mentioning all of these things because, again, I often see that people are just doing these things just in the normal course of trying to grow their business or um, sharpen their skills, but then they're forgetting that it also should be included in your books so that it can ultimately be claimed on your taxes. Employee perks. So for those, and this was again a little bit more tailored to the hospitality industry, but for those who do have employees, right? And this is also another a timely example to give, especially when we're at the end of the year, where we have holiday parties, where we want to give appreciation gifts to employees. These are all things that, if structured correctly, not only benefit the employee because they're not going to be paying taxes on these different perks, but then it also counts as a business expense for the company, right? So understanding these different things. If you're throwing a holiday party, that can be considered a staff meal, right? But then there are also tax provisions where you can have recognition programs for your particular company so that now all of what you're doing for the employees to show your gratitude and your appreciation for them can also be a tax deduction. The different trainings that you may send your employees on, like I know LinkedIn has plenty of different like free resources or even paid resources that you can allow employees to participate in. All of these things can count towards um, your business expenses, and these are sometimes things that need to be re-added onto your books. Like oftentimes these aren't necessarily just things that are paid for on your bank account so that they can be categorized like in a QuickBooks or a Zero. You sometimes have to have these conversations with your bookkeeper to say, hey, these are the things that I'm doing. This is what I did this month. How can this be applied to my book? So I'm making sure that I'm capturing all of this. The same thing with uniforms, benefits, that includes health insurance, that includes transportation. So there's options to like give employees money towards, well, we're in New York, so Metro cards and like different things or I think it's Omni now. I'm so behind, but you know what I'm trying to say in terms of the different things that you provide to your employees and to yourself as an employee of your business, right? That should be counted from a tax standpoint. And then, well, not lastly, but I guess to kind of wrap it all together is paying yourself properly. So it was also reiterated in the beginning of the presentation that in order to know where you stand, you have to know what your numbers look like, right? And if you don't know how much you're making and how much you're spending, then how do you know how much you should be properly paying yourself? And how much do you know how much you should be properly paying your employees? That all comes from knowing your numbers and knowing what's actually going on in your business. So that then helps to set up payroll so that you're making sure that making sure that everyone is getting paid, but then also keeping in compliance for the business. Another new, I guess, component of this is with the new tax bill that went into effect this year. There's also benefits to employees and for well, mainly for employees, that they would be able to deduct what they're getting paid in overtime and also deduct what they're getting paid in tip income, right? That's going to be huge from not only an employee retention standpoint, but then also being able to attract new business, right? Or excuse me, attract new employees to your business. So knowing, okay, I'm just going to use easy numbers, $100,000 in my business this year, I now know that I can go out and hire more employees so that I can continue to grow the business. But you only know that once you know your numbers and once you have your books in place, right? So that, and we're all concerned, well, not concerned, but we're all focused on the money, right? We don't want to pay too much, and we don't want to leave anything on the table. So a lot of the different things that I mentioned will help to support that. And then, yes, thank you. And so to kind of give you a checklist, if you will, or things, because I mentioned a lot of things, and a lot of things have been mentioned by Ylyss and Clarita as well in terms of what you should be doing or the different things to focus on. So to give you an idea of kind of yeah, checklist or kind of a playbook, if you will, of what you should focus on from a tax perspective. Once you have your numbers in order, once you get your books cleaned up, once you have your financial statements and everything like that in order, now we know we can move forward to the next step, which is compliance. So not only for the hospitality industry, but for those who are maybe in real estate or even other types of businesses, when you are paying people, so whether it's paying your employees or whether it's paying independent contractors that you kind of hire on a temporary basis to do work in your business, they need to receive tax documents that reflect what you've paid them during the year. For employees, that would mean that they need to receive W-2 forms, right? Which shows how much you've paid them, how much they've paid in taxes, so that they can use that to file their tax returns. The same thing needs to be done if you've hired independent contractors or people that are not considered employees of your business. And if you've paid someone as an independent contractor, which again means that they're not a direct employee of your business, they also need to receive a tax form. And that's typically considered or typically reported on a 1099 NEC form. NEC stands for non-employee compensation, right? So if you've paid this independent contractor more than $600 throughout the whole year, so from January to December, if you've paid them at least $600 or more, it is a responsibility of you as the business owner to then issue them or provide them with a 1099 form. The preparation and the issuance, if you were giving those forms out, need to be done by the end of January. And that deadline is typically put in place again to allow those people to be able to then file their own tax return, right? Everything kind of follows a workflow, if you will. So in order to be able to stay in compliance and be able to meet these requirements, you need to make sure that one, you have an understanding of what those requirements and deadlines are, but then also making sure that you have the proper information in place to be able to provide this information. What that looks like is when you hire an employee or when you hire an independent contractor, you should be providing them with the W-9 form, which then allows them to fill out their information, their name, address, social security number, right? That's the primary information that you need in order to be able to issue them these documents. And so this is a very important step and one that a lot of people miss, and understandably so, right? A lot of times this information isn't explained as when you're starting a business. And then also when you get in the mix of actually running your business to make money, a lot of these things can sometimes slip through the cracks. So just understanding that if you're paying people as employees or contractors of your business, you need to issue them tax forms and that there are deadlines in order to be able to do that. So hopefully all of that makes sense. And the way in which to be able to do that starts with having books in order so that you know how much you've paid them, so that you can accurately give them the correct documents. The other component that I would say to focus on between now and the end of the year is making sure that you're making your correct tax payments, right? So as business owners, you are responsible for paying your own taxes, right? So As an employee, your taxes are taken out of your check, right, before you even get it. So then it's already paid on your behalf. But as a business owner, the responsibility is on you to pay the taxes based on the income that you're making for the business. So that's usually done on a quarterly basis. So every 3 months, you're making these payments based on the income that you're making in the business. So that's a really important step so that when you do file the tax return, as Ylyss mentioned, you're not getting hit with this $25,000 bill, where you're not getting hit with penalties and interest because you weren't paying taxes throughout the year. But then also, if you have your books in order and then you're working with a tax strategist, now we're going to be looking at those numbers and looking at your books and then putting strategies in place so that you're not overpaying in taxes. Like, you see how all of this kind of falls in line and all works together with each other. In addition to that, before the end of the year, you want to make sure that you're making your payroll tax payments. So if you do have employees and you are withdrawing taxes from their paycheck, that then needs to be paid to the IRS and to the state, right? So you don't just necessarily just get to hold on to the taxes that are being withdrawn. Those payments actually have to be made to the IRS and the state. So that's definitely something that you want to pay attention to before the end of the year, making sure that all of those payments are being made. And then lastly, at least for this checklist, is making sure that you're setting up any year-end accounts. So oftentimes when I'm having consultations with clients and we're looking over their numbers, and they've noticed that maybe they've made more than they initially anticipated, now we're saying, okay, how can we not necessarily repurpose, but kind of reorganize how this money can be spent? A lot of times that can be done in the form of opening up retirement accounts. So whether that's a 401k or maybe that's an IRA, to be able to contribute the money that you're making in the business to those accounts to reduce the amount of money that you're paying taxes on. Or maybe that's setting up health insurance plan. So whether that's um, an HSA, which is a health savings account, to be able to then contribute money to those accounts so that it benefits you on the medical side, but then it also helps to reduce the amount that you're paying in taxes. And then maybe if you have children, right, maybe it makes sense to also set up like education savings accounts. So whether that's a 529 plan or an ESA, which is also an educational savings account. These are different things that if you contribute money to these accounts, it is now being placed in a tax advantaged account where it can grow in that account tax free, but then it's also reducing the amount of money that you're paying taxes on. So those are what I think would be the kind of the three main areas to focus on between now and the end of the year to set yourself up for next year.
Yeah, thanks, Lorraine. So key takeaways, what we want you to walk away knowing: clean books equal less stress. I mean, if we haven't said that enough, like, clean books is the key to getting through tax season, getting through the end of the year, knowing your business numbers so you can grow. Small weekly habits prevent big year end messes. So, as we said, if you do this monthly, quarterly, weekly, everything adds up. To wait till the last minute, it's usually stressful on all parties. Stressful on the business owner, stressful on the bookkeeper, the tax professional. Everybody involved is stressed. You don't need to be an accountant. It helps to be consistent or hire a professional. If you don't want to struggle, if it's easier for you to just pay for convenience, it would be advised that you hire a professional to do it. Don't waste your time doing things that you don't know how to do. Good books make tax strategy possible. Like Lorraine said, that is the key. That's the foundation. You need to know the numbers in order to plan for your future, whether that's tax, loan, growing the company, hiring people, letting go of people, knowing the books, having clean books, that sets everything up. Clear records equal more tax deductions you don't miss. I mean, I don't even think I need to stress on that one.
Yeah, well, thank you so much. We just want to thank you all for joining us. As you can see, we have all of our information here as well. So we'd be very happy to speak with you. You could contact us after if you have any additional questions, or if you're also looking for a professional to work with you, we'd be happy to do that as well. And also do share within your network. Thank you so much, and we wish you all the best during this season. And we hope that you have a very good January and you're able to put things in place to avoid any additional stress at the end of this year or beginning of next year. And we are, just to add again, we're more than happy to help you as you prepare for end of year and as you go into next year as well. Have a good one.
Thank you, everyone. Bye. Happy
Bye. Have a great
holidays.
day. Happy holidays.